have probably start discussions on the situation in Middle East with the traders that sell to the Middle East. And I assume the majority of the traders that go to the, let's say, Iraq and Syria market are the Turks. So is there anybody from Turkish steel traders that have business in that region and have had to change their way of doing business? Do we have any Turkish traders here? All right, let's hear you.
I'll be there.
Can you have the microphone to Ali, please? Well, you're the only one. I'm sorry. I'm surprised with all the Turks in the in the attendance and only a few Turks attending here. Okay.
Okay. So sorry. What was the subject? I lost it.
Okay. If you're selling to the region, which is the Iraq and Syria,
yeah.
And has it affected your business, and what's your plans going forward?
Actually, we are not selling anything to Syria and Iraq, but as we are hearing from the market that there is a serious problem in Iraq market, in northern of Iraq, so the volumes are getting less, and it's a little bit putting some problem to the Turkish producers in the region. And for Syria, we are not hearing any tonnage currently going. Some small tonnage is going to Syria, but very limited, like 5,000–10,000 tons in a couple of months. There's a good potential in Syrian market after all these political problems solved out. But at the moment, you know, we don't see any potential in this market. Iraq is still good, but less than before. I think personally, if we talk about the region, Iranian market can be interesting in future, in near future, for both selling and buying, because Iranian market is not really doing very well recently, but this is a huge market with some relatively small production. I know that they are increasing their capacity, their liquid steel capacity. There is a lot of investment going on in Iran. I personally think that in coming years, Iran can be an important player in steel market in Middle East.
Are the sanctions already lifted from the Iranian trade?
No, unfortunately it is not lifted. But we are hearing that already some billet trading is started from Iran for Middle East. I'm hearing some booking to UAE, some booking to Oman for billets. It seems that the local market of Iran is really not good this year because all this happening in the last 6 months. And I know that Iranian producers are also looking some other opportunities to sell their billets in the region. But recently China is more active in Middle East. So all the guys who buy from Iran, like in UAE and Oman, they started to import from China some billets. So I think in this region, Iraq is important for us to export, but Iran will be interesting to buy and sell for both trading activity. For merchant bar, I see a good potential in Iranian market. There is a lack of production for merchant bar, because for Turkey, Iran is an easy access market by train, by truck, because if you make it by vessel, you have the sanction coming from USA. They follow the vessels and everything. Right. But if you make it by train or truck from Turkey, you can make it from Izmir, you can make it from Iskenderun, you have different possibilities. I think there is a good potential there for Turkish traders or Turkish producers.
You know, you're probably right, because I think pretty soon you will see the sanctions will be lifted as well, because the approach from the U.S. to Iran has changed there dramatically, and I think in the last UN conference, Iran was addressing that Iran doesn't have to be the enemy of United States forever. That has to change. So that's a good positive sign.
Yeah, I think ISIS is helping a little bit Iran in this case. Also, UK is now has a warmer feeling about Iran. So the sanctions are lifted for some products, like oil products, it's lifted. Now you can import any oil from Iran to any countries. For chemical products, it's lifted. You can import some chemical products from Iran. For gold, it's lifted. You can make some gold trading with Iran. But for others, it's still there. For example, 1 month ago, we have heard some new sanction about against some companies and some shipping companies and some trading companies. The main problem with trading to Iran is to sell some product to Iran, because in this case, everybody questions what are you selling and for which purposes are you selling. If you buy something from Iran, I think there is not a huge problem at the moment. Only the shipping is a problem, and of course, origin of the product is always a problem.
Well, thank you very much for your input, Ali. Actually, for Iraq, we had trade with Iraq, and we had to stop. We have stopped because of we couldn't ship anything with trucks. Now, when we thought that really there's no trade going on, yesterday I was talking to one of the bigger distributors there, or a mill in Turkey actually, and they told me that they're shipping to Iraq and somehow the truckers find a way to go. I was very surprised, but apparently that's what they're saying. In fact, the gentleman told me that their trade is back to same level before the ISIS crisis. So if that is the case, maybe there is always a way to do it. But I know that the trucking to Iraq has been a very difficult issue. So that by itself is a problem. It's not the money, but it is the shipping the goods to Iraq. To Syria, obviously the Turks didn't have a whole lot of trade there. But that has stopped almost 2-3 years ago, so it's nothing new to discuss, really. But Iraq's situation is a surprise to all of us, and it has affected the business from Turkey. And when you don't see a whole lot still going to Iraq, what's going to happen is the Turks who are selling to Iraq have to go to another market, and the other markets are going to have to feel the strain coming from Turkey, and who is the main supplier of, let's say, rebar to the region. Any other comments? Well, the second question really was about the impact of Russia-Ukraine situation on trading. Is the situation expected to improve? I noted that we have Mr. Pavel from ISD here. Is he here? No? How about Svetlana from Metal Expert? Svetlana, are you here? From Metal Expert? Somebody from Metal Expert? Okay. Well, they're not following this, so now we're not going to buy their stuff because they don't know what's going on. All right, anybody else who wants to comment about the flow of steel coming from Ukraine or Russia that has negative effect on your market?
Well, we haven't seen it yet, and judging by the remarks by Kim earlier today, we probably won't, because the situation supposedly is getting less intense there. We are shipping not rebars or wire rod. We are shipping specialty steels out of the Western Ukraine, and that works well. I mean.
So you don't think there is any issue? I don't.
Well, I hope I didn't jinx it now, but so far we haven't had an issue, no.
But for the ports, did the ports change?
No.
No?
It's coming out of Odessa. It's not a problem.
Well, that's good to hear. All right, I'll move on. Second area of interest was the raw materials. Obviously, we're all seeing the price of iron ore going down. That will probably affect the scrap prices. And how do we see the future and the correlation with iron ore and scrap? And I think maybe Michael should address that.
Okay, the principal reason for the fall in ore prices has been the excess supply coming out of low-cost producers in Brazil and Australia. And that comes at the same time that there are certain changes in the consumption patterns in China for construction steel. So those two events that happened at the same time caused a rapid fall of iron ore prices. As the speaker that gave a presentation this morning from Qatar pointed out in a graph, that up until the 1st of September, the average iron ore price in China was around $100 a ton. And now we have gone below $80 a ton for a 62% FE fines from Australia. And this means that for the Brazilians and the Australians to compete it out or slug it out in the marketplace, they're still probably having costs somewhere around $40 a ton FOB-stowed. So they will be the survivors. The question is, who will be the casualties? And this is a situation that's going to be back and forth in between the Chinese and the Brazilians and the Australians for the balance of this year. One thing to remember is that China is buying ore on the spot pricing, so it's very volatile. And the future sentiment, for example, for iron ore and for rebars and wire rods and hot rolled coil is all at historic low prices for the past 10 years on the Dalian exchange and the Shanghai Futures Exchange. So people are not optimistic in China. So it is a safe bet that we should all expect to have continued low prices for iron ore based on since 2007, and that in many parts of the world, DRI facilities, HBI facilities, blast furnaces in Western Europe, they purchase their iron ore on a lagging quarter basis. So every quarter that gives us a lower average cost of iron ore means that places like Western Europe will become more competitive in making blast furnace origin steel. And that's probably something that will affect us all as traders. And we just noticed today another report coming from Kardemir in Turkey about their blast furnace number 5 that is now supposedly going to be in full operation during the month of October. And from what I've heard is that new furnace is going to add 1.3 million tons of liquid steel to Kardemir's portfolio, which is basically the last import figures of Ukrainian and Russian billets into Turkey for the past 12 months before the crisis there. So it's a perfect scenario that right now Turkey doesn't need any billets from Ukraine and Russia, and there are some disruptions in supply. So the question is, how is that all going to fit together and give us a possibility to make a profit in the next deal?
So do you think that the low prices of iron ore will affect the price of scrap, and do you expect the price of scrap to keep going down as well?
Eventually there has to be a causal effect because of this spread that is should be 1 to 3, but it is now maybe 1 to 4, where scrap is overpriced, and that means that as long as there is a very strong domestic demand in North America for scrap prices will probably be higher than they should be if that demand was not there. So we are looking for a gradual fall in the scrap prices and not a total collapse back to 1 to 3 ratio.
Yeah. Well, I also think that on the scrap side, one of the other effects is the euro-dollar parity, and when euro is losing value, some of the purchases of scrap is done in euros, and therefore you will see that the price of scrap will also ease at that time. But of course, iron ore is a big threat. One of the biggest actually the biggest user of iron ore is China, and I understand the Chinese mills have the tendency to go back and forth. Some of the mills that they have, they can produce either or, you know. So in that case, do you think that, Michael, the Chinese will move on to the iron ore rather than scrap? That will put more pressure on scrap?
Chinese consumption of scrap of their total production is about 10% out of 850 million tons. So even if I think that's not a relevant equation, the Chinese steel industry works on the basis of iron ore, and yes, many of the state-owned mills have state-owned mines, and they can choose to buy more domestic iron ore compared to imported iron ore. But all of the mills in China, they consider the imported iron ore to be of better quality, a better percentage of Fe content and so forth. So China, for better or worse, will continue to be the world's largest importer of iron ore, and the Brazilians and the Australians will sell at the price that the Chinese will pay, because right now there's an excess supply of iron ore in the international markets because of new production.
And we had earlier discussions with you on the subject of how far can the prices go, and your comment was really maybe up to $60 or $50–$60 is where their assumed cost is, so there's still room to go. Is that correct?
We will see.
Okay. Any other comments from the audience? Yes, sir.
Very interesting question that you asked, Michael, and very interesting answer about the scrap usage in China and the future based on his view. However, 10% is 80 million tons. Yeah. Any change, as minor as it is, will create some disruptance in the rest of the world.
Yeah, so but the imports of scrap into China is very limited. There are figures out in the marketplace that the obsolete scrap accumulation in China is up to 120 million tons, and actually 20 million tons of scrap is sold on the black market in China per year, which exceeds the quantity of scrap that will be exported from the United States this year in 12 months. So yes, the absolute size of China is staggering, but it's just not economical for them to charge expensive scrap. For example, the last scrap vessel that was sold from the United States to Shagang, I think, was at $368 a ton CNF. And that's basically, if you add $50, that's the price that Shagang is now exporting billets at.
So if they have the extra capacity of scrap, why are they buying from the United States at such high prices?
Now you'll have to ask the chairman of Shagang Iron and Steel. Yeah. He has 8 electric arc furnaces, and he decides what to do.
Is there then a possibility of export of scrap out of China?
Peter Marcus was here giving a presentation a few IREPAS meetings ago, where he said that by the year 2020, China could foreseeably be a scrap exporter. Obviously, there are no valid statistics on that, but with the economic cycle and the demographics and the total steel production in China, yes, China should be, by the year 2020, accumulating 250 million tons of scrap per year. But as we all know, things do change. We can't predict the future.
But today you're saying they have 20 million ton oversupply or availability. So then probably they can start today.
Yeah, well, scrap is not allowed to be exported from China to begin with. Okay, so that's a small detail.
Yeah. Any other comments? Okay. Well, the next subject that's been asked to us is the complaints that everybody has on low profitability. And is it better or wiser to take a low profit order or just not do business? That's the question. I'm just phrased it. But anyway, the question really is, in general, the profitability of the traders. Our margins have been squeezed, and it keeps getting, lower. And what should the traders do? Should we continue to have this life where our margins are squeezed to squeeze us out of the market, or should we do something different? Do you have any comment? I hope you have comments, because this is something that bothers everyone.
The answer is it depends on, and then everybody here in this room can fill in the blank afterwards.
Well, I mean, the low profitability is not the first time that we are talking about this. I mean, the last two times or three times even, it came up, and there's not much that we can do about it. We can negotiate a good deal, or what we think is a good deal with the mill, but in the end we have to compete with other traders. I mean, it's very simple. It's not rocket science, because if it would be rocket science, we couldn't do it. So, I mean, I think it's a fact of life, and we have to live with that, and for every deal that is marginal, I think we hope that there is a deal every once in a while when we buy something long there where we make a little bit of more money. What counts is at the end of the year, and but that we have to do deals that are marginal that we probably wouldn't have done a few years ago. I think that's a fact of life. We have to deal with that.
Well, I have to say that part of this low margins is the abundance of everything. We have abundance of money. Mm-hmm. We have abundance of steel. We have abundance of really supply of almost every commodity there is. So when you have so many goods to sell, then really it's tough to bargain and make better profit. Now, this is given, I understand, but I kind of differ on the approach. I really think that part of the thing that traders can do is try to increase their margins and have serious discussions with the mills that they buy from. In fact, the next question is, the question is, with the producers trying to do the traders' job more and more often, which other new skills the traders should find to be able to survive? I noticed that what we do nowadays is basically finance our clients, which is one way to do it. We have better service, we have more product availability, but really when it comes to margins, it's tough to compete with the mill that supplies to you. But my suggestion, and I would like to hear from you all, is if your mill is selling to your client, you have the money, you have the knowledge, go to another mill and bring that product and compete head-on with your own mill. So I don't think the mills would eventually like to have so many different mills competing in your own market. So it's create a competition between the mills, because a lot of mills have their own regions and they're very strong in their own regions. You do not have to accept life as it is and exit from the market, because if you don't have profitability, eventually you're going to have to exit the market. So I don't think it's the end of trading. I think this business has been around for hundreds of years, and I think we will continue. We just have to find better ways to do it. But I just really want to hear what you have in mind and what suggestions you have. Any crazy suggestions I accept, because it's okay. A suggestion today, as crazy as it is, may not be tomorrow. Any comments, guys?
I don't think, Don, I mean, again, I don't want to repeat myself, but I think all the traders know how to calculate and they all know what they have to make at the end of the year and all this. But there is ample supply. You forgot on your list there are lots of traders too. So we do have a very intense competition. Okay, so I mean, I don't see an answer. There is no patent answer for it that I could come up with something how we can increase the profits. Sometimes it's a margin call. You have to, a judgment call. I'm sorry.
Well, sometimes it's yes, but it continues to go downward. So I'm thinking that because we're the ones who really finance the trade, and we're the ones lately doing the trade that is tough for the mills to do. We're going after the markets that nobody wants to go. We're taking the risks that nobody wants to take. I mean, I know a lot of Turkish traders go to parts of Africa that nobody really been there before and took the risks that there is. So there's a lot of risk that you guys are taking, and there must be a reward for it.
This morning, one of the speakers from Manchester United had a word on the slide program that I thought was very good. First, you have to have a vision, and then you have to work tirelessly. And one of the things, for example, Newport Trading is a mill trader, and one of the principal visions or reasons for Newport to have a trading company was to be able to have access to real-time information from all over the world. And if people have the right information and they have a limited or enough intelligence, you should be able to figure out how to make a profit. Otherwise, you have to have another vision, or you have to work 25 hours a day instead of 18 hours a day. That's a philosophical comment.
Okay.
No?
Well, it's true, but what is the next vision for our traders, you know? I mean, I see everybody quiet. Do you really accept the way? Please, I want to hear what you need to say. Gentleman on the back.
Yeah, well, I think one reason why people are silent here is that, I mean, if there is really a secret of what there is a trader to be doing to get rich, I don't think they would want to disclose it to their competitors here. But generally speaking, I tend not to get too paranoid about mills also trying to replace traders, if you will, or do part of their job. Of course, on the one hand, there's the value addition that the trader does, whether it's financing or logistics, which is not that hard of a task, to be honest with you, nowadays. But it's also about the priorities. You know, a mill at the end of the day has to focus on its production. And they might have a few sales managers who come to conferences, meet people, and know your customers. But their priority, and by priority, I just don't mean the hours they spend in the office, but the dedication of their capital, of all their resources, should primarily go to their production, rightfully so. Traders have different priorities, and their priority is to locate the next opportunities, whichever one these may be, and make a trade, make a business out of that. And most of these are temporary. I mean, how often do you see a business be very lucrative one year and then the next year it's already redundant? And mills just don't have that flexibility by nature. So a trader, as always, will be looking out for the new opportunities, whether it's selling billets from China to Turkey, and if there's an anti-dumping in Turkey against Chinese billets tomorrow, selling them somewhere else. Frankly, we don't know. We just take it as it comes. It's the recognition of these possibilities and making a small or large profit out of them for a short amount of time, which defines the trader's task. In terms of the low margins which you referred to, I mean, yeah, it would be really nice if we could all make more money, wouldn't it? But the fact is that right now we are in a structural oversupply in the steel market. That's no big secret. And like every other commodity cycle, we are in an exploitation phase right now. The investment phase of steel is over. It started somewhere around 2000 or before that, and it ended actually just after the crisis, the financial crisis. And now it's a period, we are finding ourselves in a period of exploitation, where companies will find it easier to be more profitable with fiscal discipline, cutting costs, and just getting creative basically with their expenditures and with their cash flows. This is the reality at least I'm living in right now, and I don't think there will be a lot of people out there who say there happen to be some markets you don't know of where you can make this much amount of money on a ton. Well, we simply cannot find it at the moment.
You had a comment, sir?
It's back there to the right.
I'm from China, so actually I just talking about the traders' idea about China. First is the relationship with the mill. Actually, China is a very special country, not like European, not like America, all different. The relationship with the mill is very important. The traders always working with the mill and keeping the relationship. They have to have dinner with them, drinking, also different style. So actually, the relationship in China is very important. In the foreign countries, the final customers can connect with the mill directly, but they have not as good at the relationship with the mill as the local trader, because they always the mill together. They talking about their sales, their policy, and also the deadline of their offers. But this kind of information, some of the final customers cannot get, because it's the secret in the mills, and also it's the mill options to offer how much price to their supplier, to the final customer, or to the traders in China. So the first reason is the relationship. The second reason is everybody knows the Chinese companies, especially the state-owned companies, is very different. It's a focus on the sales. That's why this year many companies, they increase their sales and become Global 500. Actually, our company is also Global 500. But it seems they do not care about the margin. So the state-owned companies, several times they want to sell the material, but do not care about the margin. Even several times they bet the market and lose money, they will still want to perform and get more sales and become one of the biggest companies in China or in the world. So that's why they always offer the low price to the customer. They reduce their cost, and also like the financial, like the logistic, all of the aspect. Actually, the government supports the company a lot, help them to reduce the cost. And the companies, even the company lose money, the government still supports them. That's why the traders can offer the lower price than the mill several times, and keep the relationship with the customer and the mill. So in China, I think it's very special country. The traders will be, I think, will be active, actually sometimes more than the mills. That's why you can see here the traders come to this meeting, but no mill come.
So you mentioned that, and I do agree with you that there is a relationship between the traders and the mills do recognize the importance of the traders, and but because of that you make certain margins, and you mentioned that the margins that is given to you or allowed to you is kind of is low, but it still is guaranteed. So there is I think from what I understand from you and our experience as well, Chinese mills do recognize the importance of the traders and do expand the world via their traders, similar to Korea, similar to probably Japan as well. It is in the Western world or United States or Europe, and probably in the Middle East as well, that the trader's job is getting squeezed almost every day. But one thing I'm going to mention is some of the low profitability of the traders is due to the traders themselves, and especially I'm going to talk about there's a rebar situation in the United States. Traders buy megatons and put it in the port in Houston or in various ports in the United States. When you have such large tons sitting and waiting, you have no choice but lower your prices to sell. So that is absolutely not necessary. If you bring just enough to sell to your customers, you probably can do better. When you keep thinking that you can bring megatons and probably the other won't, and the other does as well, so you have abundance of imported goods sitting at the port. So it's not really only the mills who do that. I think it's part of the fault of the traders who keep buying and thinking that maybe next buy will make a profit, and lately none of them do. Any other comments here? Okay, next area of question was the southern Mediterranean. And the question is, in the situation in the southern Mediterranean region, is it still profitable to do business and trading in southern Mediterranean? I'm assuming the northern Africa they're talking about. Do we have any traders that do business in northern Africa or Africa itself? SteelForce is here, right? Well, can we hear from you on Africa itself?
The business on Africa, there is still possibility and potential, but as we said earlier, margins are under pressure, but the potential...
Even in Africa, the margins are under pressure?
Absolutely.
Wow.
Absolutely. You do see a tendency, and it's also because of too much open information in the market to the customers. Customers are also traveling more and more to the sourcing countries, to China, to Turkey, to Ukraine, to Russia. They know the structure. But business in Africa is still profitable, otherwise we would not be doing it. Let us be clear about that. But Northern Africa, historically we have not been very strong in that area, so on Northern Africa I cannot comment, so I'm sorry. But East Africa is difficult business. There the local business is very much industrialized already, and in West Africa you see a tendency of a lot of distributors now investing in rolling mills based on scrap, and they're over investing and using the traders' money for their investment. So on that side, trade is difficult. That's true.
How about the payments? As far as I understand, most of the African buyers do not have an opportunity to issue international letters of credit. So how can the mills sell direct to Africa? What kind of payment guarantee do they get?
Some mills also work with credit insurance companies, so they also have credit lines on certain customers in Africa. Like we traders have to do, we have to sell on open terms. We try to limit the payment period. It used to be 90 days, but a lot of customers are asking for 180 days or even more. Certainly, latest evolution for Chinese material, as delivery period is longer, transit time for shipment is longer. Some some customers are asking for 220 days, but we are not granting that because we are trying to limit the credit period because it's high risk in Africa.
And the credit insurance companies would allow you to go 180 days?
180 days is allowed, yes, not beyond that.
No, I hope so.
No, but there are even, sorry to say, Chinese credit insurance companies trying to give credit. You have all kinds of them. So that's an issue
So you're
as
really
well.
talking about the Chinese credit insurance
No,
companies?
this is a new evolution that we do see, so that might change also the future for trading business.
Let me ask you this question to the gentleman from China. Is the credit insurance companies out of China, are they government organizations or are they privately owned?
I'm not sure.
The gentleman, the gentleman who just, well, I'm sorry, I didn't get your name, from China?
Yes.
The credit insurance companies, are they Chinese government-owned credit insurance companies or are they private credit?
Government.
Okay. So it's basically government subsidized, I understand.
I think they will lose money. The insurance company. Actually, as I know, many companies, they do the credit like have problems. Actually, the insurance companies only pay 70% of the total amount if the accident happens and the customer refuses to pay. This accident already happened within many companies, especially in the state-owned company, because only the state-owned companies they could accept the payment as credit DA. But right now, I think because the economy not very good and the price keep going down, so many customers refuse to pay in time. So I think the insurance companies will lose money because so many accidents happens.
Well, it's very nice to hear for China, obviously, because in the U.S. we have 30 days maximum. We can stretch is 90 days. That is to U.S. customers. When it goes to overseas, it's even tighter. But obviously, when you have a government, behind it, they can do that, and that's good. That's probably how they can give those large terms, because really, the credit insurance is the key thing. To be able to give those terms and compete with the Western banks or credit facilities. Gentlemen, you had in the back. Any other comments? Yes, sir. Ali here.
Let me comment a little bit about North Africa in general. If I go by country, we can start by Egypt. Egypt was a very good market during 2009 and 10 because there was a big crash in Turkey after 2008. So there was a room for traders to make some business because the local producers, they couldn't drop the price as fast as Turkey, so the price difference was huge, like $200, and there was a good room for Turkish traders, for any traders. So we did some good business in 2009 and 10, but after 2010, the Egyptian buyers or traders, they had some direct access to the producers, especially in Turkey and in Ukraine. So slowly the margin started to get less and less. And I think after 2012, there is no margin at all. Now there's a direct business in between the... there was also a problem of language in the country. So there were some small traders who were speaking English in Egypt. So they did some good business during that time. But when the final buyers saw that there's a profit, so they started to hire some guys who speak English, and they started some direct business. The business between Egypt and other countries is based on cash payment. They pay like 20–30% cash in advance, and the balance before shipment, again, by cash. So any trader can do some business with Egypt because they pay cash. You don't have to have some credit line or anything. It's a little bit changing by Ukraine. Now I'm hearing that Ukraine is asking like 10% cash in advance and trying to create some credit line for the buyers. So they are not asking immediately to pay them. And recently we are hearing some Chinese guys entering in these markets, like all markets. Egypt is buying, but trading is getting more and more difficult. Margins are getting less and less. Right now there are some problems in the market, energy problems, so the local guys, local producers, they have difficulties to produce. There is a lack of natural gas in the country. There is an opportunity, but again, margin, you shouldn't expect much. About Libya, there is a lot of problem in Libya. Still a lot of social and political problems. A lot of problem on discharging of the product. So you have a small margin, you make a shipment. If your vessel is waiting there for a while, you lose everything.
So there's still shipments going to Libya?
Yeah, a lot. Sure. For different products, not only steel, also a lot of cement product is going through Turkey and through Europe to Libya. So something is going on in Libya, but margins are not big, and your risk is the shipment. The vessel is going there, and let's say you expect it to discharge 1,500 ton per day, but it discharges 100 ton, 200 ton per day.
And then you're liable to the shipping company.
Yeah, exactly. So it's a big problem. In Tunisia, you have practically two buyers for long products, for billets and rebars. Rebar is not a regular business. Billet is a regular business. But these two buyers are going to tenders. So they are selling the tenders to everybody in the world, all the producers, all the traders. So if you want to make any business in Tunisia, you have to have kind of a position in hand. If you don't have a position, if you try to make a back-to-back business, there is no opportunity because all the producers are already in Tunisia. They receive all the tenders. In Algeria, it's a difficult market. In Algeria, you know, there is Tosyalı company who started the production recently for rebars. And it seems that they will increase the capacity in Algeria because they really enjoy the low cost for scrap. And they have a good profit in the market. It becomes more difficult to compete with them because their product portfolio also is increasing. Now they can supply all the sizes. They don't have a problem with thin sizes for rebar, especially I'm talking about.
I'm sorry, that used to be a perfect market for the Europeans because they had zero duty.
This is the disadvantage of other countries other than Europe is the tax, 15%. For Europe, we have seen different traders to sell products to Algeria. For a while, for example, Stemcor was very active. They were the one to provide the biggest tonnage. Afterwards, there was another trader who was becoming more active. In my opinion, Algeria is a market that you can make a turnover, but you cannot make a big profit. For many reasons. It's a competitive market. All the importers, they know, all the traders or producers in Europe. For payments, they don't have much problems because they can now open LCs. It's not a big problem. Also in Libya, you can receive some LCs. There is no problem to receive LC. Only the bank commission are high. In Algeria, you still have the discharging problem. The discharging rates are a little bit low. So again, you are risking the shipment cost. Your margin is not that big. As far as I know, right now there is a Belgian trader in Algeria making some good tonnage, but I know that they are not making a big profit. They just want to keep it to make some turnover and to keep their credit line against the banks. That's all I know in general.
Thank you very much, Ali. Really, that's very insightful. I mean, that's when I listen to you, I get really worried because the traders are the ones that are taking the financial risk. They're the ones who are talking about the security risk, because especially when you mention Libya, I mean, we can hardly govern our own embassy there, and now you're talking about bringing steel to the market and trying to secure your margins there. And then you have obviously another risk, which is shipping, and when you ship and to be able to discharge it, and and then you have the possibility of losing your profit margins when the ship is discharged slow. So there's huge risks that you guys are taking, and unfortunately with very low margins, which is what you said, to my big surprise. I always thought that when you go to those tough markets, you should be making a whole lot of profit. But then again, I guess not.
Sorry.
Go ahead.
No. I'm just touched it.
Okay. The next question is really something Bernd had discussed this morning, so maybe I will have Bernd really address it a little bit more if he has to, please.
You mean about the protectionism? Let me see, regardless. Well, yeah, it's hard to answer that question. The statement is more a statement than the question. They said the final sentence is, are anti-dumping measures not only short-term measures without lasting effect? And no, they're not short-term. They could be short-term, but they have a lasting effect. Unless you win the trade case from the point of view of a mill, as the Turkish mills just have done with rebars. But I've seen many times when dumping orders were issued against steel items, wire rod, rebars in the past as well. It has an effect on the market, and that's the intended effect of the petitioners in the US. They want the prices to go up, they want supply to be curtailed, and that will make prices go up. I mean, on the rebar case now, the current one, I think that we, the import community, were pretty lucky. The Turkish mills did an excellent job to defend the case, and they kind of won it. But the threat of new dumping suits is always there, and yes, in my opinion, it has a lasting effect. Even if they don't file it, there's always the possibility, as we do with everybody's expecting a big dumping suit on flat-rolled, cold-rolled coils, galvanized coils from China now. So it has an effect. When you get a dumping order, as the Mexicans just did with rebars, it will take minimum 1 year, and then they do a review. They may come off a little bit, but it's still not safe to import then either, because then the following year they make a review again, and then they change. No, it's still dumping. So it has an effect, yes.
Michael, we had in '86, my first case was a pipe case from Turkey to the United States, and we were found to have a small dumping margin, and to this day we still have it. It never went away. I always call it like it's AIDS. It never goes away. So you have to live with it, and really, if you don't defend it from day one, it keeps going on.
Yeah. Yeah. I mean, we have the case on the wire rod side and on the rebar side too, where there were some older cases that have shut out a number of countries, and they make a sunset review every 5 years, and it's almost like a rubber stamp. I mean, they say, no, if we allow these countries to come back in, they will dump again, because it's on the pressure of the domestic mills. So the only notable exception recently was, I think for political reasons, when the wire rod case was reviewed, that had affected a lot of Eastern European countries. They took the Ukraine out. The Ukraine was ruled that they can export wire rod to the US again. But all the other countries, the Moldovas, the Trinidad, the China, the China's the current one. I'm talking about the old one. Okay, the same with the rebars. I mean, the Baltic countries are all still shut out of the US because of cases that are years old.
So it's obviously very much political, as much as it's economical, for the grain case.
But there's the role of the traders again. We have to be good. Okay, so we have to go elsewhere, and we've done it.
Yeah.
Okay. I mean, I cannot remember that because of trade issues the price may have gone up, but there was never a shortage because imports continue to come in.
Very true. I mean, I think the biggest short sight is when there's a trade case, try to import some thinking that you're going to really benefit from it. I mean, we've seen it in the recent pipe case as well. People kept on bringing, thinking that, there will be shortage of it in going forward. Never really did happen. So the prices kept the same or going down. So sometimes anti-dumping really doesn't change much because there's other countries that produce rebar or pipe or whatever the commodity you're dealing with. So probably does it have a lasting effect? Probably no, because there's other countries out there, right?
Yeah, but it does have a lasting effect on the countries that are affected.
That's true. Okay. That is true. Any other comments on this? Yes, sir.
Thank you. Actually, in the morning I was checking the presentation of Bern, and I haven't seen any product coming from Europe to USA, for example, from Spain or Italy. And we have learned, we have heard that the expectation of the currency, euro-dollar currency, is going down further to 1.15. Are you expecting some European product to start to go to USA?
Yes. I mean, are you talking about rebars, wire rod, or just in general?
In rebar and wire rod, let's say, because these are the main product of Turkish producers.
Yeah, but I did have a panel that showed, they didn't come in last year because on the rebar side now, because the Turks and the Mexicans were so dominating. But when they filed the dumping suits, then of course, obviously, the traders looked around and said, where else can we go now? And we did have occasions where people brought in some others, rebars from other sources, and specifically from Europe. We did have some parcels from Spain, and we did have a couple of parcels, maybe more than two. I just saw it for 2 months in the statistics from Portugal. Okay, so they are coming in. People have made the moves there. It's probably was short term because, as you know, the Turks are still there.
Yeah.
And as long as the Turks are still there, it will be very hard for the Western European mills to compete there. Okay, now at €1 at 1.15, as you just mentioned, that comes through. Yes, whole new ballgame.
Very true. It's 1.27 now.
Sometimes we are surprised that, for example, European producers' price are even cheaper than Turkish price. For wire rod, especially, I'm hearing very low prices in Europe. Delivered prices, not even FOB prices, delivered to stockyards. So it makes me think that Europe can be also a destination for USA importers, especially if the currency goes down further. And this will be a risk for Turkish producers that they will face if it happens. Because we already lost European market, we cannot export anything to Europe. Just occasionally, let's say, we are exporting something. But if the currency go down further, we are also risking to lose some other markets, like USA, which is now one of the main markets for Turkish producers. So your thinking and your action, because you are the main importers for Turkish rebars or wire rods, is important. What do you think about Europe is important for Turkish producers or for us who are looking for some opportunities?
Yeah, right.
Thank you.
Well, actually, there have been rebar coming from Portugal to the US and some from Spain, and if the parity keeps going down, you will probably see more. I mean, I think CELSA is just waiting to see the right time to ship more, and I guess after October 15 or 16, when the Mexican situation is fixed, then there will be probably a more definite approach coming from those destinations. I don't think the Turks will be the only ones exporting to the US.
May I also ask another thing? As far as I know, I was also working in Turkish producers. So when we were shipping something to USA, we are selling on CNF basis, and sometimes we are also paying duty. We were paying duty. So is this the case with European suppliers? Because I know that they want to sell on FOB basis. They are not really to make some CNF price in North Africa especially. If you buy something from them, you always buy FOB and you ship it. They don't want to take any risk. Is it one of the reasons that Europe is not that present in USA, or it's just, you know, the price?
No, in my opinion, that doesn't come in. My experience is with the European mills, the countries that we just mentioned, they do offer CNF. Now, were they to offer FOB only, we wouldn't shy away, because every good trader has a good department that fixes good ocean freight rates. But in many cases, we feel that the producers have the critical volume and get a better rate than we.
Exactly. You have this advantage in Turkey, because a producer in Turkey can put everything in the same vessel.
Right.
Can make a 30,000-40,000 ton vessel.
And they do. Let me tell you that.
Thank you.
Okay.
Yes, sir.
I just would like to give you an update about a trading information, let's say, to UK. I'm representing UK Cares. We are the product conformity assessment body, regulatory body, let's say, for the UK market. And all the long product traders, after the 1st of January 2015, need to get this approval as well as full supply chain management in order to provide reinforcing steel bar and wire rod products into the UK market.
Can you elaborate that a little bit more?
Yeah, okay. After the 1st of January 2015, because of this is the decision by the UK steel industry and our stakeholders in UK Cares, all the traders who are just working in the importing of reinforcing steel bars and long steel products, let's say, to the UK market specifically, may need to get Cares approval as well, in order to have the full supply chain management of the whole reinforcing steel and long steel products.
So traders have to get approval.
That's correct.
Another block, my God.
Right. They have to get the approval of whom? I didn't catch that.
Cares.
UK Cares, yes.
Oh, yeah. Okay.
Because this is the only way to secure the supply chain for the cutting and bending operations done in the UK market.
Why do they care? I mean, if the trader wants to lose money, why does Cares care?
They need to get Cares certificate, because the cutting bend, their clients would ask this certificate from the traders.
So any other trader who's not approved by Cares cannot just go and sell into UK.
The answer is yes.
Wow. That's a protectionism by itself.
No, actually, it's the supply chain management, because any trader can get this approval. It's not a long process. It's just about having the full supply chain management of the reinforcing steel products coming into UK.
But what does a trader have to prove to get that approval, to get that license?
There are some series of procedures, and they need to declare the discharge ports, and there will be some sort of a QC operation on the discharging side by Cares. That's twice a yearly audits and carried out on the site as well.
Yeah. Very interesting.
That's very interesting. Thank you.
Actually, I would like to keep on talking about Europe, and the next question was, how do you see the trend in EU market? And I think Michael should be able to respond to that one.
Well, for those of you who paid attention to Kim Marty's presentation today, he pointed out some surprisingly good numbers for the European market. The steel consumption is up 3-4%. Rebar consumption is starting to pick up at a faster pace than it has since 2008. So as we talked about this parity, US euro, I think, yes, the euro is going to lose some strength against the dollar. It probably will help European mills export more. But as Çolakoglu pointed out to me yesterday, that half of the hot roll coils that are exported from Western Europe end up in Turkey. So it's a very close by market for the European mills. So that's probably not very currency related. That's more about proximity, logistics, the time from order until the time the material is delivered.
And duty. There's zero duty because in the community.
Yes. But for example, there are many. If you're buying hot roll coils from anywhere and you're bringing them into Turkey, when you're making tubes, you have some sort of duty drawback and so forth. And someone showed me a calculation that 9% actually becomes 0.7% at the end of the day. So.
But you have to make an export.
Yes. Obviously, but what you use as import, you can end up using in domestic market and switching the origin. So that's probably a balancing act that works well.
And the recent increase of exports from Russia into Turkey has also to do with the potential sanctions that we saw in the U.S.
Yep.
Many traders stopped taking Russian steel into Norway.
That's correct. So, I mean, the situation, Europe is slowly getting back on track. There's still an overcapacity issue in Europe, but I think there's a restriction of production, especially in long product mills, the ones that are scrap-based. They produce what they can sell. And I think that most people here have seen there's one of the most profitable steel companies in the world right now is voestalpine, and they're landlocked in the middle of Austria. So there are ways to make money in Europe in the steel business.
On going into Turkey, if you have a semi-finished product like hot roll coil, obviously there's, you can use that. But if you're selling beams or if you're selling even rebar, because it's the final product, I know you do have a serious block against the rest of the world versus in EU. Anything coming from EU is zero duty, and that's an advantage. I don't know if the Europeans will take advantage of it, but I know that for as far as the beams go, yes, they do. And in fact, majority of the beams to Turkey come from Europe. But overall, it's good to hear that European economy is doing well. And I think it's one market that
it's doing better, not doing well.
Yeah, yes.
Okay.
Don't go overboard.
Yeah.
Okay. Well, we have to start planning to export to Europe now. The next question was still on anti-dumping. I think we have talked enough about anti-dumping. If you don't mind, I'll skip that. Do you want to talk about it?
No, I'm done.
Next, yeah, go ahead.
One point I wanted to make real quick, because we talk about Turkey all the time, but the dumping was against Mexico too, and the Mexicans really took it on the chin there. And that has led to some kind of different market situations in different parts of the US. The Mexicans were very strong on the West Coast. They were very strong in the upper Northwest. They had a very excellent rail connections there. So the market there, if I look at the prices that you can get in those areas, they're excellent. They're a lot higher than in the Gulf or on the East Coast. But it's really a domestic market now. So coming back to the point a little bit earlier, it does have an effect. Okay, so we importers, the traders, we are looking now at ways and means to get to those markets in a cost-effective way. So, but that's all I want to say.
Well, some funny statistics on the anti-dumping. I don't know if you all know, but the anti-dumping first was started in Canada. Canadians were the first ones to file anti-dumping, and the most cases filed today is in India. So you would have not thought about it, but India has the highest cases, anti-dumping cases filed. And one more thing, the most cases filed, as far as the products go, is steel. So we're lucky. All right, the next question is actually about China, the oversupply in China. And well, the question is there any hope for slower growth and then maybe due to environmental issues and the low profitability. I will have Michael address that, but I want to say that the growth as far as in China has slowed, but then when you have 600 million tons to go to 700, it's less percentage, and from 700 to 800 is less percentage. Yes, the growth is, on percentage-wise, is slow, but it's huge. So it is a big impact in the rest of the world, and maybe Michael can say a few things about it.
I think you can draw 3 lines on a graph, one that's going up, one that's going sideways, and one that's going down for the next 5 years in China. Nobody can answer that question. The Chinese economy is growing at over 7% per year, and everybody in this room here, if we had a domestic market that was growing at 7%, we'd be very happy. So even though there's doom and gloom being reported out of China, it still means that there's 200 million tons of rebars shipped out in the next 12 months in China, irrespective of what the banks and the financial institutes say. So there is consumption in China. And with a 7% GDP growth, there's going to be an expansion of tonnages for sure. One of the things about the profitability in China, it's been very easy to say that the Chinese mills are making marginal profits, but they have such an absolute size. When they make $1 a ton on steel, a lot of these guys then can book $25 million worth of profit. So there's a disconnect in between a privately owned steel mill in Brescia that's making 600,000 tons of rebar and a steel mill in China that can make 8 million tons of rebar. So the cost of production and the economies of scale are completely different. It's just something that we can't realize. And the gentleman from China made a comment that China is not like Europe, China is not like the United States, and we have to remind ourselves that. What's happening is a long-term effect in China today is that there is a growing spread in between flat products and long products. And this is quite interesting because since the past 10 years, the spread in between long and flat products in China has been 0 to 75 RMB per ton. But if you look at the statistics today between the futures market of hot rolled coil and rebars, or if you look at the spot prices in Shanghai or in the provinces, it is over 300 RMB. So the long product prices are 300 RMB a ton cheaper than the flat product. And normally speaking, in Turkey or in the United States or in Holland, the cost of production for flat products is higher. And the main reason for that is because the capital expenditure to build a flat product mill is usually 3 to 5 times more than to build a long product mill. But the main advantage that China has in the steel industry worldwide is that their capital expenditure costs are very, very low. Much lower than anywhere else in the world. And so if you take out the capex equation, it means that a flat product mill that has low capex in China, that has a selling price that's 300 RMB higher than a mill making wire rod, I see profits in the flat product business in China. And since China is a developing economy, it's going to be less or now close to being a developed economy along the eastern shore. It means that the consumption of rebars will be, and wire rods and construction steel will start to decrease, where the rate of increase will start to decrease, whereas flat products still have a potential to increase. So that part of the Chinese steel industry may have a chance to be still profitable, whereas there should be some exits of long product producers in China over the next 10 years. The question is how much, how soon, and will we survive the onslaught of long product exports from China before that changes?
One other question I want to ask about this one is, for years we've been hearing that the banks in China are in trouble, and the loans are exaggerated and the returns are slow, so there will be a financial crisis in China, and which in the past is always overcome. And of course, when the economy is going with 8 to or 7 to 9% growth, then those mistakes go away. But now, recently, I hear more of those problems where we have credit issues with the banks, and also some of the housings that's been built in China are not really, they're not able to sell them. So there's a serious, supposedly, oversupply of buildings. Can you comment on that one? Do you hear those same things?
We read the same things. China has lots of money. It's a big economy. And when we hear about $10 billion, we think it's a lot of money because we'd like to have that in sales revenue for our trading companies, but we don't. $10 billion is a drop in the bucket for China. They have enough money to plug a lot of holes. So unless there's some sort of civil strife or something going wrong in China, I'm sure that the banking sector will survive, and they will. There are so many companies in China that are too big to fail, both in financial markets and in the steel industry. The main issue going forward is, do they know everything that is bad about these steel industries? I mean, do they know about the private loans, the gray market loans, and so forth? So there will be some surprises that will come up, and it will probably scare lots of people. And but things will go on. I'm not expecting any doom and gloom in China.
Any comments from y'all? Do we have any traders that actually buy from China? That
we buy from China like many others do. I guess it's an unavoidable country for whoever is buying steel nowadays, and we've seen our volumes drastically increase out of China. Reasons of which are clear. The prices of China are unbeatable. But I'll tell you what does worry me about China is, of course, 7% growth is something you don't see in mature markets over here in the West. Recently, you may have read that many banks have downgraded their expectations for Chinese growth. The most optimists of whom who said 2015 GDP in China will be, they downgraded it to 6.9% from 7.3. You might think, why should I care? Well, the first issue is that you also may have heard that stockpiles of iron ore in China are actually sky high. One of the reasons which contribute to the falling iron ore prices. A lot of these iron ore piles that are just laying at the ports are tied to financial deals.
Are they imported iron ore or domestic?
They're imported iron ore. And so if GDP in China is lower than expectation, this would cause a lot of these iron ore, which, if I'm not mistaken, is around 30 million tons right now. Maybe the gentleman who left 30 could have corrected me.
I think the stockpiles in China now are like 111 million tons in the ports.
Well, yeah, the stockpiles in China. Yeah, so sorry if I mistook on, made a mistake.
That's still high, it doesn't matter, 80.
But okay, I have to correct what I said. 30 million tons of these iron ores are tied to financial deals, and they can be unwound and they could hit into the market, which will actually cause a further decrease in iron ore prices. This is what you read in almost every report of the banks who are still involved in, and the few who are still involved in physical commodities over there. And the other issue is, what I think about is that the largest Chinese producers, the state-owned ones who are producing 20 million tons a year, you would be surprised to find out that the proportion of their exports are actually surprisingly very low. Shagang, which is, I think, the biggest exporter by tonnage, just exports 10% of its production. Well, they produce 22 million tons a year, so 10% is not necessarily low. But if their local market just drops by 10%, and they try to compensate that by more exports, you can imagine how much more tons they will be hitting the market, and again, in which vicious circle we will be finding ourselves. That's what worries me, because GDP has historically been very directly correlated to the housing sector and the real estate in China. Now, again, this is something that Chinese experts can comment on better, maybe Mr. Sedotel, that government policies can change these matters overnight if they, for instance, lift capital gain tax on real estate. I don't know. It can change the equation. But the current reality that we understand it to be is that the local market in China, even if affected marginally, can have significant effects on Chinese exports.
One question I have is this 80 or 100 million tons of iron ore that's been already waiting at the ports, and the iron ore price is going down from 100 to 80. That must be they're losing like 20%. That's huge.
Yeah, well, actually, 40% is how much it decreased from what were they? How many months ago was iron ore at 120?
Yeah, but I'm assuming they're using, and as they go along. So I can't believe that they have it since from the very beginning that much tons.
Oh, well, okay. Again, maybe Mr. Sedotel can comment on this. I'm not an iron ore trader, but my understanding is that a lot of these stockpiles are collateralized, and a lot of them are actually untouched. They're tied up to financial deals. Many mills just put them there, and they actually have arrangements with their local banks, increasingly the state-owned ones, which actually enables their positive cash flow.
Yeah.
Some private mills in China, which have recently went bankrupt, have gone bankrupt or have stopped production because they don't have these facilities from the banks anymore. They used to get an LC from their buyers, and based on that they would collateralize it and import a lot of iron ore and just lay it there. Maybe Mr. Sedotel can jump in here.
Yeah, actually, I did read in one of our suppliers, City Pacific has been one of the ones that I read about that they have been using as collateralized the iron ore that they have, and they're still using the older value for their collateral, where if they come to realize it today's value, then they will be in serious financial trouble. We used to have the same accounting system in the U.S., which we have changed. You know, we also I think we call it the cost to market. Just basically we look at the today's in our accounting. We look at the value of today's market value rather than what they have purchased. So from what I understand in China, they're using the purchase value as their collateral. So then that would probably create, like you just mentioned, serious trouble for those institutions that have that much cargo on hold.
The Chinese commercial banks are not stupid. I mean, we may read things in the newspaper saying that they are, but they're not stupid. And when they collateralize, for example, iron ore on the dock, they're not lending out 100% of the value of the invoice. They're lending out typically 80%. And typically the way of operation for the domestic traders has been to have collateralize something that's on the dock, because then the banks can control an asset, and then the banks allow them 80% on that value in order to open a new letter of credit or to buy more material that may be floating on the water from Brazil or Australia. And as this round robin keeps on going, if the iron ore price is going up and down, and the company is responsible in doing future hedging on Dalian or Singapore contract, that is a business model. But when you have 3 or 4 months of continuously falling pricing, And that means that there comes a time when you have to pay the piper, so to speak. And I think that's what we're seeing now in this financial news coming out of China. And then there's also fraud cases, of course, which is a different aspect. But fraud is the same in Istanbul as it is in Shanghai.
Why did you say Istanbul?
Well, I was looking at Ali there, that's all.
But do you, sorry to interrupt, do you know how, because I've also heard some specifically domestic traders in China have been able to take advantage of this financial business model, the facilities that the banks provide. And while they are supposed to, these facilities were meant for producers, some traders, distributors were able to take advantage of that and just make money through the financing of all this. Do you know how that works?
I don't know more about that than you do. So that's, I mean, it's like a poker game. The house wins always. I don't know.
And who's the house? Anyway, any other comments on China's supply or oversupply, or futuristically affecting our markets? Okay. Do you have any other questions that you want to address other than the subjects we have covered? Well, if you don't, then we'll adjourn. Thank you very much for coming.
Thank you.